The amount of new homes being built across Canada continues to collapse. And this comes at a time where Canadians have a choice as to who is best to lead us through the next phase of Canada's growth or decline. So, in this episode, Ryan and I, 8-year realtors who have sold over $500 million in homes and trade in the top 1% of all agents across Vancouver, well, we are going to outline the key factors that shifted the housing market this week. That included the Bank of Canada rate hold. We saw new inflation data. We've got national home sales update. There is a massive decline in new housing starts. We want to talk more about how insanely bad the Toronto presale condo market is. And then lastly, we're going to break down the housing policies for both the Liberal and the Conservative campaigns to help shed some light on who may be best poised to actually create affordable homes for Canadians. Let's get right into it. Off the top, we want to discuss the Bank of Canada because on Wednesday, they held rates for the first time in 12 months after 7 straight cuts and are holding at 2.75% is the overnight rate. In the press release, Tiff Macklem, well, he leaned heavily on the uncertainty, caused by the tariff roller coaster. I mean, no real surprise there. It's got a lot of people throwing their arms up, not knowing which way things are going to go here. And ultimately, kind of like Canadian home buyers, Tiff decided to sit on the sidelines and take a wait and see approach to how and when and if this tariff debacle will actually pan out. So the potential for inflation to either rise or fall is greatly dependent on the outcome of the protracted length of the trade war, which leaves Tiff to take the safest approach, I guess, of just standing steady, right? We don't know if inflation is going to rip higher or continue to lower. And so much of it hinges on this tariff decision. So it's no real surprise, I guess, that he took the wait and see approach. Even though we've seen unemployment increasing and the economy slowing to a pretty dramatic degree, the risk of inflation due to tariffs meant that this, again, status quo is the right move to balance the country's current opposing forces. And perhaps most importantly, the bank ended its statement with the following, verbatim. Monetary policy cannot resolve trade uncertainty or offset the impacts of a trade war. What it can and must do is maintain price stability for Canadians. Okay, a bit of a safe comment, but it is speaking truth to their position. Now, moreover, the financial market volatility has pushed U.S. government bond yields higher, which is also putting more upward pressure on Canadian interest rates. So the 5-year bond yield, while clearly volatile, has been on an uptrend that, if sustained, will lead to higher 5-year fixed mortgage rates. I mean, when we look historically, there have been literal years combined in a row where the bond market would barely move 40 to 50 bips in total. And now we're in this world where we are seeing that type of movement within a couple of days. It is a completely different landscape right now, and it's going to take some time to understand the long-term effects on the economy and therefore inflation and therefore interest rates. So lastly, Tiff stated he was open to cutting further should the economy require it. I mean, kind of obvious, but he's just saying, look, like nothing's off the table here, and they're prepped to make a move up or down based on, well, what happens largely in the US.
I think it makes sense, generally speaking. I don't know if it would be wise to move down quite so quickly right after the announcement, the trade war announcements, the tariff announcements. And I think because we're, again, I mean, Donald Trump pulled that back, put a 90-day pause on it, and then all of a sudden stocks ripped, and it's very unpredictable right now. So I think actually not doing anything is probably the right move at this point. Plus, he's holding it at 2.75% in the event that he's got to go lower. Because if he goes lower now and things get a lot worse, he's going to run out of room to continue to recover this. And in turn, it would continue to push inflation quite a bit higher. So maybe that's a good place to maybe segue into the inflation results here. Inflation was expected to hit 2.6% in March, but it came in at a cooler 2.3%. This was largely driven by lower gasoline prices, and shelter price growth continues to cool as well. Mortgage mortgage interest costs were up 7.9%, making the 19th consecutive month of deceleration. Rent hit 5.1% year over year in March, down from 5.8% in February. This is clearly still lagging. We can still expect to see this come down, especially throughout the latter half of 2025. It's a bit of a lagging indicator. After a sharp uptick in February, March's CPI report saw headline inflation moderate towards the neutral range of 2%. That is assuming, of course, you believe the CPI results. However, the bank's core measure of inflation continued to linger near the ceiling of their target range, suggesting some underlying upward pressure in prices, or at the very least, the expectation of them. This core measure would have influenced Macklem's decision to hold steady on rates this week, as stable inflation is the BOC's primary mandate. Canadian inflation has now been below 3% for 15 straight months. The balancing act is now heavily influenced by the trade war and will test Macklem's abilities to chart these difficult waters here that we find ourselves in.
I want to shift into Canadian housing data because the numbers are out for the month of March. It's quite interesting to see. Now, obviously, Canadian housing, like what is that, right? Obviously, a farmhouse in Saskatchewan moves very differently than a condo in Vancouver, but it's interesting data, and we wanted to kind of share this macro level information with you. So sales nationally dropped about 5% month over month, which ultimately is very unusual to see from February to March. March is almost historically always the highest month of activity. It's either March or April, but to see it decline after February is very unusual. And what's more than that, sales are down about 20% from that recent November high. The entire country is almost emulating Vancouver's market, which is a continuing slowdown in these sales volumes. Sales are down 9% year over year compared to March of 2024. And they're actually the slowest on record going back 16 years. So it is a noticeably slow market across our entire country. Canadian home sales last month equaled the same market we saw during 2009. Again, the global financial crisis. We had a global financial crisis and people were not thinking about buying homes. Very similar market to where we are today. Obviously, with slower sales, inventory is going to tick up. It's up like 18% from last year, now sitting at about 166,000 homes across our country, which is below that 10-year average, which should be at 174,000. When it comes to months of inventory, a seller's market is below 3.6 months and a buyer's market is above 6.4. Today, our country sits at 5.1, so we're ultimately considered in just a balanced normal market. Kind of feel that here in Vancouver too, right? There's little pockets that do well, pockets that do bad, and everything is just kind of normal and civilized. HPI, what did prices do? So HPI across our country dropped 1% last month. It's actually a big drop, right? That's the largest single monthly drop we've seen in 15 months. Year over year, how bad is Canada's real estate market from last year? Well, it's only down 2.1%. And if you prefer to look at average prices, well, year over year, Canadian homes are down 3.7%. So definitely down. But like, if anyone's telling you that the Canadian real estate market has collapsed, well, I guess it looks like less than 4% constitutes a collapse. Not for me, but anyway, that's just what some people love to say. It gets the views, right? Anyway, when we look at actuality, 2% or HPI being down 2.1% in the year, I think is much less than many would have expected. I mean, it's been a tumultuous year in real estate. Everything has huge headwinds pushing against real estate and the prices, and yet a 2.1% decline over 12 months, I think is surprisingly low. I think many would have expected much more, especially when we hear about what's going on in Toronto. I guess the Canadian real estate market is once again showing a pretty high level of resilience, right? What happens going forward, nobody knows, but to only drop 2% over the last 12 months is the reality. When we break it down by province and region, there's 11 that we track. 8 provinces and regions are seeing higher year-over-year home prices, while only 3 provinces, which are, of course, British Columbia, Ontario, and for some reason I didn't mark down the third one. Oh yeah, the Yukon, excuse me. So those 3 areas are down year over year. But of course, because BC and Ontario are the most populous, they carry so much weight within that sort of HPI pricing basket. That's why we're seeing national prices come down, even though the majority of the provinces are seeing year over year increases. To the upside, those included Alberta, Saskatchewan, Manitoba, Northwest Territories, Quebec, Newfoundland, Nova Scotia, New Brunswick, and the Northwest Territories are all higher prices year over year. So really sort of hyper-local market by province, and of course, hyper-local within each city.
It's interesting, really, hearing that. I wonder how, 8 regions have higher home prices and 3 are down. I wonder if that metric will continue to change over the year as we see home prices begin to moderate, if not come down, and that goes to 6 to 5, or is it going to go to 5 to 5 kind of thing? Are we going to see just the really major urban markets taking control? I don't know. It's going to be very interesting to see. The next interesting thing too is housing starts. I mean, we've talked about this quite a bit, but this is just a really bad picture, generally speaking. National housing starts dropped 3% month over month in March. They're now down 12% year over year, hitting the lowest amount of monthly housing starts in 6 years. The 6-month moving average for starts has been trending down now for 2 straight years, and we're just getting started, I think. Expect this to hit decade lows by the end of the year, and BC is down 5% month over month and 12% year over year. But getting hyper local into the Vancouver market, it's down a massive 36% year over year. By this time in 2024, we had 7,600 new homes that had started construction. This year, it's 4,800, with over 16,000 active resale listings as well. It just doesn't feel like there's a housing shortage out there today. Though, as starts continue to collapse, and this is rightfully a collapse, the potential of notable future inventory shock to the supply, it's almost inevitable at this point.
So much for the Housing Accelerator Fund, huh? That doesn't seem to be really having much effect. And let's look at what's kind of driving this massive decline in starts. Well, if people aren't buying new homes, people aren't going to build new homes. And in Toronto continues to be the epicenter, and it just gets worse and worse on a weekly basis. And we want to expand a bit on how severe the state of presale condos in Toronto really is. So last week, we reported that the Q1 sales in the Greater Toronto and Hamilton area was only 533, which was 88% below the 10-year average, an absolute collapse. The city of Toronto, when we get even more narrow here, saw only 215 sales. That is the lowest amount of presale condo sales in the city of Toronto since 1990. It's a 35-year low. Developers are pulling back in droves. Just check out these numbers, for example. Since the beginning of 2024, 28 projects totaling 5,700 new homes were either put on hold, they were canceled, placed in receivership, or converted to purpose-built rentals. Only 2 projects launched for pre-sales in Q1 of this year, only 2, totaling 275 units. So last year, we lost 5,700 new homes not coming to market. And in 3 months, only 275 homes were brought to market this year. This is an absolute glaring example of the completion cliff coming our way and the future shortage of homes. So while government leaders have touted these pipe dreams of building 4 million homes by 2031, or doubling the amount of homes they can build per year, the reality is in fact the exact opposite, demonstrated very clearly in the numbers. Now, this is where it gets a little more terrifying. Unsold new condominium inventory totaled 24,000 units, increasing by about 6% from a year ago. It sits around 58% above the 10-year average. Unsold inventory is equal to 78 months of supply. based on the pace of sales over the last year. This is an absolute record high that is approximately 7 times greater than the balanced and long-term average of about 10 to 12 months of supply. So if no new homes were brought to market, you would still have about 6 years of inventory to eat through in the pre-sale space in Toronto. I mean, it's a catastrophic level of inventory within the pre-sale marketplace that will result in further developers probably going out of business. Let's be honest here. So let's break down what's actually selling to get a further understanding of this problem. So of the new condo sales that actually happened in Q1, the average sale price was $1,151 per square foot. That is down 7% from a year ago when they were hitting about $1,232 a foot. Furthermore, of the projects generating sales activity, you got to think here, they have to be heavily incentivized. Okay, they're giving cash back, they're doing rental guarantees, extending deposit payments, furnishing bonuses, all sorts of stuff just to get any type of product move. And that's obviously eating into the profits. So overall, the asking price for this unsold inventory is about $1,339 a square foot. So yes, even that is a 2% decline from a year ago. But you got to think, from asking to sold price per foot is a 16% gap. That is essentially the entire profit margin being wiped out. With the current landscape showing there's essentially zero profit to be made and more likely significant losses are being realized, what developer is going to come to market, right? They're just going to sit on the sidelines. Now, this creates the obvious problem of sitting there not creating revenues, right? So they've got overhead, they've got staffing. How long can a developer go without building before they go bankrupt? I mean, check this number out. A total of 497 condo units started construction in the GTHA during Q1 of this year. That's 79% drop from a year ago and 88% below that 10-year average, reaching its lowest quarterly total dating back to 1996. This means we can expect massive layoffs in the construction sector, with Toronto continuing to be the epicenter of the issue.
God, how do you follow that up? That's terrible news. And quite honest, Dan, I don't see relief in the near future. I think part and parcel because we had a lot of speculation, but two, the utility of these particular condos does not meet what people need. So this could be far more systemic than just periodic. It'll be very interesting to see this continue to unravel. Look, moving into the U.S. office space here, we know that during the pandemic, office space took a huge knock. So let's see how this has begun to recover, if it's recovering. So quick look here. As this lends also to where people live and helps provide some insight into the remigration back into urban centers, or potentially not. The U.S. office market saw significant increases in activity in the first quarter of this year. Approximately 115 million square feet of space was leased, which represents a 13% increase from the previous quarter and the highest level since before the pandemic in mid-2019. But then tariffs were implemented. Now tenants are worried that a recession is coming, inflation is going to rise, and so too will interest rates. I mean, you got to think, all of this uncertainty, none of it plays well for business and investment and long-term time horizons. This is an immediate time horizon problem that we're dealing with. Largely in part because we did not deal with things 10 years ago. So here's where things broadly sit as a result of the beginning of this year. The national office vacancy rate was 19.7% at the end of February in 2025. San Francisco had the highest vacancy rate, 27.8%. $7 billion worth of office space sales were recorded in the first 2 months of the year, and the average price was about $177 a foot. The most expensive markets were places like San Diego, which posts $662 per square foot, Manhattan at $450, San Francisco at $282, Miami at $239, and LA at $207. We will continue, I think, for some time to see a flight towards quality, and we'll continue to see how businesses maintain keeping people in the office, especially if we find ourselves in a recession.
So it is a very tough housing market across our country and has been increasingly worse, I would think, over the past decade. So it's a very interesting time for us to be having a federal election. And for those that are focused on housing as maybe a part of your decision as to which way to vote, we've had a look into both the Liberal and the Conservative housing platforms and want to kind of share what they are and of course, our thoughts into maybe the entire viability of them, right? We've got early voting is now open. And so it is time to make our voices heard. And if housing is important to you, let's have a quick dive into this segment. I'm going to start with the Liberals, kind of break down the highlights of their housing platform, and give a few comments for each one. And Ryan, feel free to jump in too. And then Ryan will go through the Conservatives. So let's dive in. Over the next decade, the Liberals will find a way to double the rate of construction from about 250,000 homes per year to 500,000 homes per year by adding supply at this rate. I guess they think housing will become more affordable, right? You double supply, you double the amount of homes available. Typically, yes, supply and demand economics speak to the truth that yes, that would help create affordable housing. Great. They really do want to help first-time home buyers and young families access the market much easier. So looking back, Canada's never in its entire history built more than 270,000 homes in a single year and averages, like I said, around 240, 250. So doubling is understandably a massive undertaking. When you double something, I mean, you're also ultimately doubling the demand on materials, right? So when do you remember the COVID era when everybody was renovating their home? Well, trades were not only incredibly hard to get, but all their prices suddenly doubled. And materials, you went down to the Home Hardware or Home Depot, trying to buy a 2x4 or some plywood. I mean, it was insane, the prices. Some of them tripled, right? And so if you try to double the rate of building houses, well, you double the demand on materials and people and resources. And ultimately, it's not something that you can do overnight. So I think it would take at least a whole decade moving forward just to ramp up to get to that ability to have the infrastructure to create 500,000 homes a year, right? Including training the trades, creating manufacturing plants to build enough materials, and then to increase the level of imports that are required to reach, I guess, the demand on these materials. You don't want to spike things and then demand, or if you create a spike, obviously prices jump. So they'd have to be very careful in their rate of growth there. Maybe after 10 years, they could get to the ability, if it was a huge focus, to build 500,000 a year. Their next is called a new entity called the Build Canada Homes, which will get the government back into the business of building homes, including on public land, and provide financing to affordable home builders. So my comments are, sure, it sounds great, but ultimately, each time we see the government put their fingers in the pie, we just see cost overruns, right? It's not what their mandate is. They're not there to be builders. And so I think every time we see them put sort of bids out to tender, they just get squeezed. We see it time and time again. So I don't think them going in is going to suddenly create an affordable landscape where people are suddenly working for less or not charging them more for things because they just know they can, right? It's an unfortunate reality of our country is the government can be taken advantage of. And if they go into housing, I would presume the same thing would happen. I just don't see a world where the government building homes results in anything becoming more affordable than, let's say, the people, the companies, the builders that have been doing it for decades or generations. They already know their margins in their business so well. How can the government just step in and think they're going to do it better or cheaper? I think it's a tough one.
They're not.
Fair. Okay, next up. Government will provide $25 billion in debt financing to prefabricated home builders. Okay, this is interesting. And, if you know me, I'm pro prefab and modular style housing, which ultimately just means the technology of building and how you evolve that, right? I think prefab is going to continue to be more popular over time. And yes, of course, I'm a fan of them promoting the evolution of building technologies. That's great. There's an additional $10 billion in low-cost financing to help affordable home builders. Okay, great. So one-liner. There's no details as to what kind of rate this low financing actually is. And when we talk about $10 billion, let's break down the numbers a bit here. The average cost to build a home in Canada, and let's use Canada, right? So we are going to include Ontario and BC where it's expensive, but some of our better priced provinces as well. I mean, realistically, all in, you're maybe $500,000 to build the average 2-bedroom condo in Canada. And I'm being conservative here. So divide that by the $10 billion, and that means they're helping to finance 20,000 homes. 20,000 homes. Okay, today they've also said we're short 3.8 million homes, but here's a plan to build 20,000. I mean, it barely scratches the surface. And just one reference here, when we look at where Canada is spending some of its money and where they're helping this world, just as a comparison, don't blow up the comments here, but just as a comparison, Canada has sent the Ukraine $20 billion so far, right, to help with their horrific situation. And by comparison, there's 10 billion over here. And yes, we can analyze everything that they've spent money on, but it's just, I just find 10 billion low. I've been talking about why not offer zero interest construction loans across Canada, and I don't know, make it 100 billion. Like why have a limit, right? The money's coming back to you. So I just find them capping it at 10 bill an odd and arbitrary number. Let's move on. Next, they want to cut development charges in half. Yes, obviously this is great. Okay, cutting taxes on homes will make them unaffordable. We know that, right? There's already a third of the cost of a home is going to taxes and charges. And the more they can cut that down, the more affordable houses become. And I think it's the easiest path for the government to be able to help. But there's a caveat, and they even mention this in their housing plan. They state that they will work with municipalities on ways to make up that lost revenue. Okay, so what does that mean? It means, sure, they're going to reduce development charges and then probably create another tax somewhere else that ultimately results in Canadians paying the same amount for the same home, just in different ways. Okay, moving on. They want to reintroduce a tax incentive on rental buildings. Okay, and what this means is it's called the MERB program. Investors could depreciate the value of their rental property, not including land, and apply the capital cost allowance against other sources of income, reducing taxable income in the short term. Rental losses could be used to offset active income, such as employment or business income, a major tax advantage at the time. When this was active prior, from 74 to 1981, it's estimated that about 200,000 rental units were built under this MERB incentive. Okay, so it was technically working. They were bringing rental homes, affordable rental homes, to market. But that program was phased out in the early 80s. Why? Well, there was concerns about abuse, limited long-term impact on affordability, and shifting economic conditions. The ability to apply the CCA against other income was curtailed, right? They stopped it. So what they're saying is, let's go back and reintroduce a plan that was basically abused and pretend that it won't be again. Their greatest idea here is to reintroduce something that ultimately, I guess, failed. Next up, they want to build on the success of the Housing Accelerator Fund. They're going to further reduce bureaucracy, zoning restrictions, and other red tape. Okay, as we just discussed, 2025 will go down as one of the lowest amount of new homes being built in a year. So where is this success entirely? I mean, while the ideas are great, the execution is a disaster. And just the mindset to think that the Housing Accelerator Fund is working terrifies me. I mean, it just shows how, I guess, dislocated they are from reality. To me, it raises a big red flag. But all right, I'm almost done. They want to speed up permitting, eliminate duplicative inspections, and speed up application approvals. Again, yes to all this, all fantastic ideas. But here we go again. Like the last 10 years of Liberal government essentially created all these problems. And now they're just trying to undo their own mess, or at least say they're going to, but they're going to keep the same people in power ultimately, who I think resulted in the creation of these issues. So again, I'm for all of that statement 100%. But again, it's, is it just lip service, or do they actually think they can do it? I mean, clearly, I find the Liberal housing vision tepid at best. And with the Liberal track record, I just simply don't see any significant change to our housing issues should they be elected.
I see a lot of red flags, but I see a lot of red flags, generally speaking, with politicians. It's interesting because you brought up, or not you, Dan, the Liberal housing plan brings up $35 billion worth of expenditure, right? $25 billion in debt financing to prefab home builders. Why do we feel like prefab home builders can handle $25 billion in debt financing? And second of all, where's that money coming from? We're just going to print another $35 billion? Or are we going to cut something from somewhere in the budget? Because I can tell you, if we print $35 billion to try and help create more homes, the price of these homes is going to be much higher. It's very, very simple. And it's funny. It's like, so much of these policies are we're going to help here and we're going to help here. And much like the last point you made here, Dan, speed up permitting, eliminate duplicative inspections, and speed up application approvals. None of these are under the jurisdiction of federal government. So this comes down to the municipalities. It reminds me, the whole platform, and the conservative one, it has its faults too. But it reminds me of that Upton Sinclair quote, which says, "It is difficult to get a man to understand something when his salary depends on him not understanding it." And this is, I feel like, 500,000 homes when we're going to budget for 20,000. What are we talking about here? I think the message I'm trying to send to everybody listening to this is do the math yourself. Do not listen to what's being promised to you, because none of it has come true in the last 10 years. And I'm not just saying it's from a liberal side. It's governments all around the world. It's a lot of empty promises, and there's very little how as to this is going to get done. And a lot of just get me into power, rah, rah, rah. And then I just don't see the change coming. Anyhow, with that said, I'll get onto the conservative housing plan. And unfortunately, I'm about as enthusiastic as Dan was about the liberal one here, but let's get into it. So they'll start by firing the gatekeepers who block housing construction instead of giving them massive bonuses. Again, okay, there's not much description in what this means. Maybe we don't need a ton of description, but maybe who's going to be replacing these people and what is that system going to look like? That would, some detail here, I think, will go a long way. They will require cities to free up land, speed up permits, and cut development charges to build 15% more homes each year. If they miss their target, their federal funding will be withheld equal to how much they missed their target by. This is actually, I think, at a 30,000 foot level, this is a good idea. But again, the devil is always going to be in the details, because how do we execute this? Again, 15% more homes each year is probably a bit more reasonable than promising double the amount of homes. So at least it's a little bit more reasonable from a numbers perspective. Municipalities will also be required to pre-approve building permits for high-density housing and transit stations, and will not receive federal funding for transit until there are keys indoors. This could create buildings that are not very well thought out, and honestly speaking, could get curbed just because, again, you're putting the incentive not around. You're putting the incentive around pre-approvals, not around building the right homes. So again, you could end up with the wrong product here, like we've seen in Toronto, and that's a real threat and something I think that could very well happen. It needs governance and execution. Conservatives will provide even more land to build on by selling 15% of the federal government's 37,000 buildings, and will require these buildings to be turned into affordable housing. How? We'll also end federal delays by cutting the bonuses, salaries, and, if needed, fire the gatekeepers at the Canadian Mortgage and Housing Corporation if they fail to approve housing applications in 60 days or less. I mean, it's great. This is pointed in the right direction. At least there's accountability. I want to know why the government has 37,000 buildings. That's another thing. We'll make homes more affordable by axing the federal GST on new homes up to $1.3 million. This would save homebuyers up to $65,000 or roughly $3,000 each year in mortgage payments on the purchase of an average home in one of our big cities. Yes, this is actually a very good idea. The more we can cut taxes on homes, and at least we know which tax is getting cut, I would like to know how long this will stay in place and will it ever come back? Is it repealing this? Or are we just lowering the rate like we've seen with the carbon tax, only to reintroduce it later on? Next is incentivizing municipalities to cut development taxes. Will save roughly $100,000 on average in one of our big cities. Again, yes, let's continue to cut taxes, but are we shrinking the government as a result? Because, where are the details in all of this? It's, again, much like the Liberal plan, there's a lot of one-liners here that we're seeing, a lot of promises and not a lot of execution and ability to deliver. Reward big cities that are removing gatekeepers and getting homes built by providing a building bonus for municipalities that exceeds 15% increase a 15% increase in housing completions proportional to the degree to which they exceed this target. I largely agree with this, mostly because I believe people entirely respond to incentive. So performance-based incentives, or reversely, penalties, may very well produce some action. Cut the bonuses and salaries, and if needed, fire the gatekeepers at CMHC if they are unable to speed up approval of applications for housing programs to an average of 60 days. Again, I like the idea of performance-based incentives, but it really, who's policing this? Who's the oversight committee? Who's making sure they hit their numbers? Who's reviewing applications? How are we making sure we're actually hitting these numbers, right? On top of axing the sales tax on new homes, a Conservative government will incentivize municipalities to cut building taxes for a total saving of $100,000. So for every dollar of relief a municipality offers in development charges, a Conservative government will reimburse 50%, up to a maximum of $50,000 in savings for new homebuyers. Olivier already announced his plan to eliminate the sales tax on homes under $1.3 million. Again, $65,000 savings. So you combine the two policies, and this will lower the prices by about $115,000 if they can do it. For an average home in the GTA or Vancouver, a savings will be approximately $100,000. It's a lot. So Conservatives will also require cities to publicly disclose their development charges and explain how the federal reimbursement will be used so Canadians can hold those municipalities accountable when they build instead of building bureaucracies, my goodness, they will build homes. Again, this all sounds great, but it's a big, fluffy promise with very little tactical insertion. And, I think if you step back for a second and you look at these promises, it's banking on the fact that most people don't understand how jurisdiction works. A lot of this federal programming is talking about stepping on the provincial jurisdictions, stepping on municipal jurisdictions. And as Dan, we've seen from Bill 44 with the multiplex plan, it's not this simple. And to be quite honest, I'm glad we're all talking about housing, but none of this is really going to materially impact where we're headed with pricing. We need more of a fundamental change. Like you said, we cannot just overnight go from 270,000 homes to 500,000. Who's going to build them? Who's going to pay for them? Where are the developers? They're going out of business. We've got housing starts going off a cliff right now. I just don't understand all these promises without looking more systemically at what's creating the issues.
Very complicated as always, though either way, I think it's an incredibly pivotal election and a big decision for Canadians. So exercise your democratic right and get out and vote. This is what we feel on housing, but obviously there are many other issues within our country. So vote accordingly. And as always, thank you so much for tuning in and listening. Housing keeps moving in fascinating ways in our country, and we'll continue to bring you the most recent and most impactful updates week after week. Thanks again. Have a wonderful long weekend, and we will see you here next week. Bye.